Here are some of the big stories we'll be watching this week. TUI, the world's largest holiday company, publishes its third quarter results. Ivan Duque is sworn in as Colombia's president. Life insurance companies post their results for the first half of the year, and we'll look at the health of Germany's construction industry. TUI is the world's largest holiday company, but its investors might be feeling a little hot under the collar when it reports third quarter results on Thursday. In July, TUI shares were among the FTSE's fallers over worries that hot weather and the World Cup had hit demand for package holidays. Nevertheless, its shares are up more than 34% in the past year. And back in May, TUI said its multi-billion euro investments in cruise ships had helped boost revenues and earnings.
This is a key quarter for investors. The first half saw a loss, but that's not unexpected. The results for TUI are heavily weighted towards the second half, where we see the summer holiday revenues come through. The suggestions first quarter were pretty good. 59% of inventory seemed to be booked up for the summer holidays, which is pretty good going. However, we are seeing some headwinds for TUI, not least the fate of Turkey, which is one of its key destinations. The turmoil there won't be helping its customer base. So investors will also hope that TUI will show some sort of diversification within its revenue stream. TUI's been pushing its cruise ships, for example, which have been proving popular, and these things tend to offset any sort of structural decline in other areas. So to sum up, there is some uncertainty, but it should prove a pretty good summer for TUI and indeed its customers.
Life insurance companies take centre stage this week. Standard Life Aberdeen will report results for the first half of the year on Tuesday, followed by Prudential on Wednesday and Legal & General on Thursday. The industry has changed radically in the past few years. Some companies have moved away from traditional life insurance businesses to focus on fund management. And the three companies posting results this week illustrate neatly how life insurance is splitting in two.
Standard Life Aberdeen used to be an insurance company. It's really moved away from that towards asset management over the last 10 years or so. The results that come out on Tuesday will show the pros and cons of that, particularly how difficult it is to keep customers interested in asset management products. Prudential is not quite as far along that route. It's also restructuring itself a bit, combining its UK asset manager M&G with its UK insurance company. So there'll be an update on that restructuring. Finally, we'll hear from Legal & General has stuck more solidly to insurance and annuities. There's been a lot of activity in that part of the market in the first half of the year, particularly from corporate pension schemes passing their pension liabilities onto insurers like Legal & General. So Legal & General may give an update on exactly what that means for its business.
Now to Colombia, where President-elect Ivan Duque takes office on Tuesday. The right-winger will replace President Juan Manuel Santos. Mr. Duque takes office as members of the FARC, the now disbanded guerrilla group, took 10 seats in Colombia's Congress for the first time. But the FARC members did not win their seats. They were given to the 10 under the terms of a peace deal negotiated in 2016. That deal is under strain since it was signed more than 300 community leaders, trade unionists and human rights activists have been assassinated in Colombia. Mr. Duque has promised harder punishments on rebels.
Si nosotros queremos ser un país que construya la paz para todos, tenemos que darle la plena garantía a cada ciudadano que camina por las calles de Colombia, que lo que tiene para proteger sus libertades es el Estado de Derecho y que cualquiera que se los vulnere tendrá una sanción ejemplar.
And finally, the Eurozone's economy may be slowing, but the German property market is booming. House prices in major German cities have risen sharply in recent years, despite sluggish inflation in the broader economy. That's because the European Central Bank's low interest rates have led to a surge in demand. A closely watched Purchasing Managers' Index for the sector's performance in July comes out on Monday. This should shed light on whether house builders can keep up with demand.
Traditionally, Germans have tended to rent rather than buy the places that they call home. However, the European Central Bank's ultra-low interest rates have had an impact on demand here. We've seen prices surge in the major cities such as Berlin, Frankfurt, Munich, Hamburg and Cologne. Now, the big issue for construction is that while firms have been building more houses, they're just not keeping up with demand. And what you're seeing is middle-income earners especially being priced out of the property markets in the major cities.
And that's what the week ahead looks like. from the Financial Times in London.